Hi, I'm Keith Boyle. I'm the CEO of Newfoundland Gold Corporation, and we have a significant property package in Newfoundland where we have a high grade resource that uh, has identified 1.4 million ounces of indicated and 600,000 ounces of inferred. And along the 110-kilometer package, we also have some exciting targets that we'll be following up for on exploration. We're currently doing a PEA on those resources that I've just mentioned and have just closed on a $63 million bought deal financing in order to raise the money to now advance the project into the next steps.
Keith, lovely to meet you. Thanks for coming on the platform. You're new to our listeners and viewers on the platform anyway. Look, Newfound Gold is long time known to us. It's a long-term explorer, but there seems to be sort of a new look Newfound Gold going on here. So you joined beginning of this year?
Well, I did.
Right. And what was the brief?
So really, in January, well, let's back up even a month where there was a complete change out of the board, significant change out of the board. A new chair was appointed, Paul Hewitt. He's a miner of many years' experience, lots of capital markets experience as well, ex-Karora and Klondex. And so he came in to really refresh the company and look at changing the directions, which then included hiring me, which I've got 40 years of mining behind me. Have looked at development projects many times, 8 of them in fact. And so now this is number 9, and I'm excited to do that. And then in February, I looked at the team that we had and needed to put in place to take it down the development path.
Okay, so there's a new business plan in place and a new strategy as well. You're mind builders. That's what I'm kind of reading between the lines of the material that I've seen.
Yep.
You certainly are. What about the rest of the team? Are they mind builders, or is that a kind of process you got to get through?
No, we've like I said in February, I put in some new players in the team. I brought in a VP of communications and corporate development, who is helping us get the story out and looking at new opportunities. That's Fiona Child, who's a doctor of geology and many years' experience on the corporate communications side. I've got Jared Saunders, who's our vice president of sustainability. He has a lot of experience in Newfoundland. He's a Newfoundlander, very proud Newfoundlander, and a lot of experience in particular with Vale in advancing the Voisey's Bay, project. And I also brought on Rob Asabgi, who, longtime mining engineer. We go back quite a number of years, but he was study manager when I was last at Reunion Gold, right up until last year when we got bought out by G-Mint. And prior to that, Rob was the vice president of the Manitoba division for Hudbay that brought the Lawler mine into production. So he too has project development experience.
Okay, now talk to me about this, because Newfound Gold's kind of got a very, I guess, unique profile in terms of the geology. Super high grade vein. Some people understand it, some people don't. So, how have you got the experience to actually, be able to extract the value from Newfound Gold?
Well, in that 40 years experience that I have, that we've got, I've done probably more than half of my experience has been in the Abitibi and Timmins camps, where it's all about narrow vein gold. I've spent some time in Australia as well, and so I've seen lots of narrow vein gold and been through all the issues that come up with narrow vein gold in terms of continuity, nuggety gold, dilution, and really understand how, what the pieces are that we've got to put in place to do that. Was excited to see that the team at Newfound, when I was looking at it, actually, the team at Newfound, what they had done over the last couple of years was exposed the veins right at surface, the high grade ones right at surface, and mapped them and sampled them extensively. And so that gave me a huge level of comfort that there was a real understanding of the interpretation of those veins and the grade distribution in those veins, because you could actually see them on surface. There was not going to be one of these blind, we're going in blind and then we get a surprise once we get there. We can see them right at surface.
You're obviously walking into a situation which, or perhaps, the market would suggest that it had stopped understanding what the company was about. And you said, look, we need to get an initial resource out and we need to get it out real quick. And you did. So explain the logic and the thinking behind that. Why not just keep drilling?
When you look at a bit of the history of the company, actually, the deposit was discovered back in 2019, and I mean with spectacular grades, and then as they kept drilling, they were getting spectacular grades. They continued to get those spectacular grades. Some of that drilling was very tight space drilling along the high grade chutes that they had discovered. Others was new discoveries, and so it was difficult for the market to fully appreciate and understand what was there, because it is narrow vein and it's not a simple geology to piece together. So, well, actually, back in November, prior to my start, they had announced that they were going to do an initial mineral resource and a PEA. And so I thought it was important to get that mineral resource out quickly, so that the market could see this is what we have, and then to put, I guess, my stamp on it in terms of advancing. Well, what does the project look like? What might the economics be around a project?
Okay, but I think it's fair to say the reaction of the market suggested they thought there'd be more coming. How do you feel about the size of the initial resource? Why do you say, do you know what, this is a good enough starter pit for us? Let's put it out now.
Yeah. So the market may have wanted more, and it's hard to estimate narrow vein gold. It doesn't matter who you are, unless it's like this, basically this sheet of plywood. But and that's not what we have. Unfortunately, we've got something more complex. So it takes quite a bit of effort and skill to put the resource together. This is a really good resource to start with, mainly because you've got, when you look at it in the vein, most of the gold is in the veins. And so you've got 75% of the ounces in about 25% of the tons. In my experience, when I see something like that, it's, well, you can start small, you can start high grade, you can generate cash flow quickly, you can bring forward the higher grade ounces and stockpile the lower grade ounces to process later on. You can, in our case, we have a mineral resource where we've got vein clusters that have generated open pit shells for the resource. And so it gives you lots of flexibility in terms of mining the higher grade portions first and delaying the lower grade portions later. And it gives you that flexibility to possibly use open pits for tailings or waste. And so it'll reduce the overall cost of a project that way. So there's a few advantages, but getting the resource out right away also allows for us to then look at a project and look at it from a point of view of how do we get to cash flow the quickest, so that we don't keep going back to market and diluting the shareholders more.
Right, and obviously, like, it's a difficult market out there. Money's hard to come by, but you went out recently. So I think you closed your 63 million bucks now. Is that right?
Our $63 million flow through
Right.
financing. Yep.
Oh, so who's in that?
Well, our lead order was from Eric Sprott, who's our major shareholder, largest shareholder, I'll say, and so he maintained his pro rata 19% in the company. We do have a private placement that is going to be coming for a shareholder vote because Eric committed to another 20 million, and so we need a shareholder vote for that. But what that tells us is that Eric is still extremely supportive of the project and the potential here on this project, not just the resource itself, but the exploration potential.
Right. Look, I know the PEA is coming out by the end of this month. I think you've been telling the markets, so you can't say too much at this point in time. But what exactly was Eric buying into when you were saying, "Look, I'm going to put out this this initial resource estimate now. We're going to have a kind of main pit and some satellites here. I think it's going to be able to generate us some money to be sort of in terms of anti-dilutory measure, but allow us to get this thing started to show people the potential, and we'll move on." So what do you? I don't know how much you can say, but what are you hoping that the PA is going to be able to tell the market in the next few weeks? Because from the estimate, the resource estimate, people didn't quite get it. Do you think the PEA may change that?
I'm not really clear as to they didn't get it. What I think from as a mining engineer in the many years that I've seen these kind of deposits, when you put a PEA together, you look at a resource overall and you say, look, there's a certain percentage of those ounces that usually find its way into a mine plan. And it isn't. It's quite typical to see 70 to 75% of those ounces in a mine plan. So, from a planning perspective, it's really around now. How do we bring forward the high grade? Maybe start small and bring forward the high grade in order to bring forward that cash flow. Some of the things that could be looked at, some of the trade-off studies is, do you start small and toll mill to begin with? Do you go big with a larger operation, full-size operation right at site? Is there a combination of both? These are kind of things you would look at as you're looking at a deposit like this this just gives you a lot of flexibility.
Okay, and let's just go back to the financing again. So use of proceeds. Okay, with the board deal, and looks like a private placement maybe later in the summer, with Eric leading, I guess both those. What do you think the order of play is in terms of the allocation of capital? Like your mine builders, I get that bit. All the good fortune and I guess the notoriety come from the exploration. How do you marry those two up?
So, generally speaking, it's about an 80-20 split. 80-20 is going towards infill drilling, all the drilling towards the advancement of the project. So you've got infill, you've got tighter definition drilling around the core at the top, which is where you'll start mining. And then you've got more extensional drilling of the resource area, and then you've got what I call specific project drilling, geotechnical, condemnation. You've got a bunch of other drilling that you have to get done, siting of infrastructure, all hydrogeological, all part of advancing and getting ready to permit a project. And so those studies, that drilling is going on. All the while, we also have drilling specific on following up high-grade targets that have been identified later in the year 24, and after the resource got closed off. We have Dropkick that's 11 kilometers to the north that has some really good grades and is wide open, and it's again the kind of grades that were found when the deposit was discovered and had everybody excited. And so we're quite excited by that target just south of that RAB target, So we've got a few really exciting targets that we want to follow up on and continue to drill to see if we can't find that, what I call the game changer for the company.
Okay, so your task at hand is to build a mine because you're mine builders, and your task at hand is also to work out the kind of scale of the opportunity here. On the latter, are there new mines being built in Newfoundland? Is there support for it? What are the things that would possibly stop that from happening, and what do you do about it?
Well, I mean, in terms of support, it's been fantastic support in Newfoundland. They've the government have come out and said, "Look, we want 5 mines by 2030." We believe strongly we'll be one of them. And so one of the things that has happened is that we've engaged with government early on in order to really understand the permitting regime and understanding what they're looking for in terms of the project description, so that it helps them advance the projects faster. And so if there are certain design, and then we can take those and put them into our designs so that they can see those things. And as an example, they've asked us to have a look at the complete footprint of what we'd be looking at in terms of a project. And so those kind of items that come out of a PEA that still require some work as trade-off studies, we'll be doing ahead of submitting for our application for that environmental assessment. So just that dialogue alone, and then that's the government, but then the communities are really supportive of the project. And we go out there about once a quarter to visit the communities and keep them updated as to what's going on. And you can tell they're really supportive, and it's rare in the mining industry where you come across that kind of level of support. And of course they have concerns, but the people on site, the team, have done a great job at saying, yes, okay, well, this is how we'll address our concerns. But even in some of the meetings they've had where someone was had a real concern, someone else would answer for us to say, well, no, that's not the issue, and basically resolve the issue for us. So when you've got people starting to talk for us in those community meetings, you're hitting the right chord.
Right, and so I know you're up near Gander, aren't you? Does that mean that you kind of got access to skilled labor, or is this kind of fly in, fly out territory? Where do the people come from?
Well, so our project is 15 kilometers outside of Gander, Newfoundland. For those that don't know about Gander, it was the outpost where international flights had to land coming into North America, basically, to refuel, and flights going over to Europe would land and refuel before they headed over to Europe. And so there's a huge airport there, and during 9/11 they actually had 38 planes land and had to house all those people in that community for the number of days that they were there. So we know that the community's large enough, but not only that, within an hour's drive of the project, it's almost 80,000 people within that hour's drive of the project. So we've got 2 major towns, Gander and Grand Falls, Windsor, and a lot of the outlying communities. And every time I've flown into the site and out of Gander, in and out of Gander, about half the plane is full with workers coming from mines across Canada as fly in, fly out. And so they're looking for jobs locally so that they can go home at night.
Right, Keith, it's a nice sort of introduction here. I suspect that the real news will come when the PEA is out, and we can sort of judge you on the economics. We can judge you on your ambition and plans to move this from, as I said at the beginning, an exploration story into something that can actually generate revenue. So appreciate your time today, I really do, and I'd love to speak to you when the PEA comes out.
Okay, definitely. Then I'll have lots more to say, Matt.